Hello, everyone. Welcome to you all to today. We've got Danielle and Eddie from Guardian going to be talking about their new income protection. So a couple of things before we start. If there's any questions you want to ask, hopefully you can all see the chat and the Q&A boxes. If you put your question in there, what I'll probably do is wait until the end and then I'll ask all the questions at the end. So if you think of something during the presentation, just type it in there and then I'll pick it up at the end. Also, in terms of the CPD certificates, they'll get sent out. I would imagine you'll have those by Friday. We get a list over to our marketing team who'll send them out. So if you haven't got them by Friday, drop me a line and I'll make sure yours is sent out to you. So on that note, Danielle, I'll pass over to you.
Good morning, everybody. Welcome to our Guardian presentation on our new income protection. It's fantastic to do this with you today. So we've finally launched income protection. I think it's been one of the worst kept secrets since we launched back in 2018. And a lot of advisors have been waiting for us to bring this product out. So the reason why we've launched IP is it really completes the range for us to help you be able to make more holistic protection planning proposition to your clients. So we're going to go through everything today with you, and as we've already mentioned, if you've got any questions, please put them in the chat and we'll answer at the end. So just a bit of housekeeping. We are an appointed representative of Scottish Friendly Assurance Society Limited, and they have over 160 years experience in providing financial products and services. As we've already mentioned, there is a bit of an agenda today. We're going to touch on why income protection is important and really how you can add value to your clients at the moment. 5 reasons why our income protection stands out compared to the rest of the market. What else is built in? How income protection completes a set, and other reasons to recommend Guardian as well. We've also got Eddie as well from our underwriting team, who's also going to take part of the session and explain about how we look at underwriting for you. So, as you know, we launched about 6 weeks ago, and I've already mentioned that it does complete the set. So it gives you the opportunity to be able to recommend more than one product for your client with ourselves, which really opens up being able to provide a really holistic protection plans for your clients at the moment. So why income protection? Well, I'm previously been an advisor myself, so I firmly believe with Consumer Duty around the corner, which is on the 31st of July, there's never been a better time to look at income protection for your clients. Some of the key principles of Consumer Duty is providing your clients with good customer outcomes and to look at ways to make sure you're not causing your clients any foreseeable harm in the future. Now, none of us have a crystal ball, okay? And one way you can look at that is income protection is probably one of the best products you can recommend a client to stop any foreseeable harm for them. Now, also, you've got to remember that we've got an aging population now, and people are living a lot longer. There's rising levels of debt out there. People are working for longer, and people are growing more aware to income protection. And it also allows you to look at rental markets, because people are not being able to afford their own homes because they're a lot older when they're getting a mortgage now. So income protection's got a great opportunity out there for you. Now, one of the things you should be talking to your clients about is, if we go back 2 years, it just seemed like a lifetime ago, is COVID. And what I'd be asking your clients is, how did COVID affect them? Did they take advantage of furlough? What impact did it have? Did they take advantage of the payment breaks with mortgage providers and loan providers and credit card providers? If they did, I'd be asking why they have took those breaks. And the reason why is because their income reduced. So every client that you're speaking to has got a scenario where they've had firsthand what happens when an income's reduced and what stress and things that they have to go through in order to be able to pay the bills. So it's a great opportunity to be able to bring income protection to life and create your clients their own furlough scheme. Some of the things on here do explain, obviously, things that we should be aware of to educate your clients. Statutory sick pay recently went up in April to £109.40. And that is for only employed people, okay? Now, the average weekly earnings for an average household in the UK at the moment is £594.10. So if you think that your clients, if they do end up going on statutory sick pay, they're only getting £109.40 per week, then that's not enough to pay their household bills. If you've got clients who are self-employed, they wouldn't get statutory sick pay. It's more universal credit that they apply for. And depending on what tier of universal credit, they'll probably be getting between £70 and £80 a week, which is not very much at all. The other benefit with income protection is it's one of the only protection policies you can provide a client that can support illnesses that are not covered by KIC. So 66 million working days are lost due to critical illnesses not covered by KIC policies. And that's looking at your 1 in 4 people who have a mental health problem, and 1 in 6 people get anxiety and depression and take time off work each week. And that's how 66 million working days are lost. Now, it'll be no surprise that the most common claims on IP are musculoskeletal problems, mental health, and cancer. And that's according to the ABI Association. So it's a great opportunity to start talking to your clients about income protection. And 40% of households can't survive a month without income. So, you know, there is an opportunity out there. So common objections I used to face as an advisor around why clients won't want income protection is they would use savings. They'd ask the mum and dad, they'd ask family and friends to be able to help them if they were unable to work. Now, if you think about it at the moment, we've got a cost of living crisis at the moment, okay? And everybody's feeling the pinch, okay, of the money's not going as far as it used to. So savings rates at the moment, instant access savings rates previously been very low. You're looking at about 0.75%. But actually at the moment, savings rates are actually increasing. So there's instant access savings rates out there that are 3%. So your clients actually using the savings now might not be the right thing for them to do. So I'd be having conversations with your clients is, how long is it taking them to save? What are those savings for, and how would they feel about having to use them? Let's look at ways we can make sure we can protect your savings so you don't have to use them. And that's by putting an income protection plan in place. Now, using mum and dad as an example, mum and dad may be retired and they may have money sat in the bank, but a lot of people who are retired are having to take other jobs now because, again, their pensions are not stretching as far as possible to cover the cost of living. You've also got, when your clients say, obviously, you know, well, I'll be at home, I won't be spending as much. Well, gas and electricity, you know, that's never been as high as what it is now. So you're always spending. So this graph shows here about how people would struggle if they were unable, if they didn't have an income. So you've got 13% of people would struggle within the first month. 30% of people would struggle between 1 month to 6 months. And 16% of people would struggle between 7 and 11 months. Now, at the bottom end of the scale, you've got 10% of people wouldn't struggle at all. So it's quite low. So there's a massive gap where you can be looking at supporting your clients. And the best thing about income protection is you can tailor it more to budgets. So there's lots of options to be able to get it affordable for your clients. So the reasons why to recommend income protection. As I've mentioned previously, we've brought income protection to the market, so you can now have the opportunity to do a full protection plan, a full menu plan for your clients. Now, the benefits to you as an advisor is that is one simple application that you would need to do, which also involves one lot of underwriting. And also with regards to keeping that client as your client, it also prevents other brokers from rebroking your plans, because it's really hard for another broker to copy a menu plan. For your clients, there's also lots of benefits as well, which I'll touch on later, why offering a full menu plan is better. Our own job definition, which I will cover with you later on, also means that we actually cover the client's actual job, not their occupation. And what that typically means is the market normally covers own occupation, which basically means the type of job, the work, the profession, the trade, the industry they're in, rather than we will cover their specific role they do, what they're actually paid to do their job. So this gives your clients more certainty at point of claim. We also offer waiver premium as standard, regardless of the deferred period of the IP. So this is giving something back to your clients. Even if there's no income loss, we'll be waiving those premiums for them. And we also offer children's critical illness cover on there as well. This also gives you an opportunity to make sure that every time you speak to a parent, you can also protect a child. With children's critical illness, what we've realised is a lot of our children's critical illness claims come from our life-only proposition. And what that tells us is that our clients really do understand the value in having children's kit. So this allows another opportunity for parents to get cover, even if they can't get critical illness cover themselves, or if they can't afford critical illness cover themselves, we can give them the option to add IP, children's kit to their IP. Part of consumer duty is for providers to need to support consumers, making it easy for them to make changes. And to make changes on an IP, because IP policies can be so long, they can be right up until someone's state retirement age, or they can be right up until the mortgage ends. We need to be able to have a lot of choice and flexibility for your clients. So we need to make sure processes are easier. So that can be processes at claim stage, it can be processes throughout the life of the plan as well. So you've got a lot of choice and flexibility to really tailor packages for your clients. So our menu plans help protect your clients perfectly. So you can create the perfect protection package. Now, if you've not used our Protection Builder 2.0 dashboard, it was really built with advisors in mind. So we really took on board a lot of feedback that advisors have said. So our questions seem to be really clear compared to other providers. And you can do up to 10 covers for each person. So if you remember, if you've used us previously and you're an advocate, we offer dual life on our products. So actually, if you had a joint customer, you can do up to 20 protection policies. It's really easy to use as well. So let's get into the nitty-gritty and talk about our own job definition and how this is really different. So one of the core values of Guardian is we wanted to be a bit of to change the market. And what we did is we looked at where the market shortfalls are. And we've done that with all our products. And one of the things we've always been really proud of is clarity of definitions. So we really want to make sure that we pay more claims, and we always put the customer at the heart of everything we do. And that's why we have opted for an own job definition. So what this means is we will make sure that we'll pay out if an illness or injury prevents your client from doing their actual job, not just their occupation. Now, this will help achieve really good customer outcomes at point of claim. Now, it does only sound like a small point, but it does make a massive difference. So it allows your clients to have, it allows us to pay more claims for your clients. It allows us to support them for longer if they're on long-term sick. It gives a lot of clarity and make sure they're clear. Now, what I would be saying to you guys as advisors is, in order to bring to life the own job definition, I would be asking some more questions on your fact find about what your client does for a job. Now, I'm going to give you a couple of scenarios here that I'm going to go through now, so you understand why it makes a difference understanding someone's role and what their day-to-day duties cover. So I've got Rita here, who's a nurse. Now, a nurse is a really broad occupation, so you can be a nurse and do a variety of roles. So Rita is an oncology nurse, and she's attached to a day clinic. Now, her role involves her manual handling. So that could be her lifting people in and out of bed, washing and dressing them, pushing along the wheelchairs. It's quite a heavy, laborious job. Now, Rita develops a frozen shoulder. Now, under own occupation definition, if she went to a provider, they would say, well, actually, Rita, you can still be an oncology nurse in the day clinic, but what you're going to have to do is just reduce the level of manual handling that you're doing. So probably take on more of the admin and the lighter duties. Now, if Rita went back to work and had to ask a colleague or maybe find someone else who could do those manual handling, there may not be anybody there. She might find herself having to do those kind of things because the NHS is so stretched at the moment. So that is not the right outcome for Rita. She's been paying a policy where she believed that obviously if she were off sick, it would pay out for her. So under our own job definition, we would pay that claim until she's able to return to work and do her own job. So it gives a better customer outcome for Rita. We've got John, who's a factory packer. Now, John works in a warehouse where can be quite a dusty environment. And he developed asthma, which is triggered by this environment. Now, in the warehouse, there is alternative packing teams where he can be a part of that won't have that same concern. But actually, currently, there's no role available for him to move to a different department. Under own occupation definition, he'd be asked to make a reasonable adjustment, and probably his claim would be declined under own occupation. Again, this is not the right outcome for John. So under own job definition, we'll pay that claim until he found a role that's more suitable within his team, until the policy finished, or until he returned back to work. What you have to remember is people choose jobs for a variety of reasons, okay? So it could be down to the income it's going to be paying, it could be down to the family life that they have at home. So Jacob is a HGV night driver, and he may have chosen that job for a variety of reasons. Night driving pays more, or he might have children at home that he needs to look after during the day, and working night really suits his home environment. Now, he develops night blindness due to glaucoma, and this results in being unable to drive at the night. However, what you need to remember is he actually can still drive during the day. So under own occupation definition, he is still able to work as a HGV driver. He just needs to change to the day shift. Now, imagine if Jacob went to his employer and said, I need to just get on the day shift. They may turn around and say there's no vacancy. They may say, well, we can get you on the day shift, but you're going to have to take a pay cut. Or it might be that he just doesn't fit within his family life. So again, this is not the right outcome that we want to make for our clients. So again, under own job definition, we would pay that claim until he can find a more suitable job where he can drive during the day, or the policy finishes, or he's back to full health and he can drive back in the night. And that is providing good customer outcomes and giving peace of mind to your clients that they are going to be having successful claims when they make a claim. So as I mentioned previously, it's really important now more than ever that providers be really flexible for your clients throughout the life of an IP plan due to consumer duty. Life changes, life event happens, and the plans need to move and flex with them to make sure they're always going to be fit for purpose. So how we start this is from setting up the plans. We give you a 2-year or a full-term payment period. According to ABI, the normal policies and the most popular are the 2-year option, and that's why we've chose 2-year and full-term options. We have a choice of deferred period to suit your clients. We've got 4, 8, 13, 26 or 52 weeks. And we also cover quite a high percentage of people's earnings more than other providers. So we've got a really good 65% of annual earnings up to 60,000, 50% of annual earnings over 60 to up to 100, and 45% of annual earnings over 100,000. So we recognise during the term of the plan, this is where the key part is, where things can change. A lot of people are always looking for new jobs, so the impact of changing a job can have a massive effect on an IP plan. So we offer things like a lifestyle promise. So if your client changes occupation class, the right thing to do is to be able to move this plan with the client. And we can change occupation classes during the term of the plan. So whether that's from an occupation class 4 to 1 or 1 to 4, we can move with the client. We may need to change the deferred period. So the client might get a longer deferred period from work, okay? So we can then change the deferred period for them in the plan. Also on the lifestyle promise, if we've given some kind of rating where we've your client's opted because they've got a smoker rating, or for example, they do a hazardous activity where we've put a rating on there. If they stop smoking or if they stop doing the hazardous activity, we can take that off. Your clients can also take advantage of guaranteed increase options as well. So this can be, for instance, if your client has a salary increase, takes on more debt, the family changes, the rent increases, we've also got really good GIO options that they can take advantage of. And GIO are fantastic for reviews, and they're also fantastic to make sure that your clients are not going to get underwritten again. So if they've had any medical problems in that time, they are going to still get be accepted. We can also keep in line with inflation. So it's really easy to talk about inflation now to clients because there's not a headline out there that doesn't mention it. So it's really easy to explain how inflation works. So inflation is making sure, the money that the client receives remains its true value. So your clients can add inflation to the plan, and they can decline up to twice without it coming off. So the advantage of that is, say, for example, this year we send a statement out to your client to remind them of what they're covered for, and they opted for inflation and the premium increases and also the sum assured. This year, it might not be the right reason for your client to take the premium increase because they might not have had an increase from their salary this year. So they may opt out. But next year, again, we'll give them the opportunity to opt in again. So it gives some flexibility to choose when is the right time for them to have the inflation. We also provide annual statements as well. So this is really a good opportunity to keep your clients educated, keep them up to date, and offer reviews. And we send them out to yourselves. Now, at point of claim, this sounds like a really simple thing, but because a lot of other providers have legacy systems, they can't choose a day of the month that a claim is paid. Now, we don't believe that's the right thing for a client. Everybody runs their family home differently, gets paid on a different day of the month, have direct debits coming out at different days, and they may get paid weekly. So at a time when someone's going through some stress of being off work, sick, or not feeling well, what we don't want to then is put them in a bit of a financial mess as well, having to phone around all the direct debits, having to change things. It's not the right thing. So at point of claim, your clients can choose a weekly or monthly payments. So they can pick what day of the week or what day of the month they can pay out. They've got a lot of choice there. So they can pick a payment date that suits them. And again, this will have a huge impact on your clients. It does sound like a small thing, but it really does make a huge difference. And as I've already mentioned, we'll waive the premiums after 4 weeks, even if there's no loss of income. So this brings us on to premium waiver. So with all our plans, we always offer premium waiver as standard. It's at no extra cost. Now, remember what premium waiver is there for. It's there to keep your plan sticky, and it's there to make sure you don't get a clawback. But there's times when a client will feel like they need to cancel a plan because they're put in situations where they can't afford it. Now, with all our plans, regardless of the deferred period that you do for an IP plan, we'll offer a 4-week deferred period on accident and sickness. And the reason why we've done that is because that really encourages the clients to tell us early. So imagine if you've got a client that has a 26 or a 52-week deferred period, Now, because they notify us early, we can start waiving their premiums for 4 weeks. So that's just giving them a little bit extra, something extra in their back pocket. So even though we're not paying the plan, as in the sum assured, and we're not paying the claim yet, they're going to still save a little bit of money right from week 4. So it's giving something back. And then it also helps us be able to provide more support. So for sickness and accident, we'll pay from 4 weeks, right until the client obviously returns to work or the policy ends. We also offer maternity and paternity leave. Now, we're the only provider in the market to offer this. Now, if you've got clients who've got maternity and paternity leave, these are times where clients are really assessing their affordability. They're going down possibly to statutory maternity pay, which is about £680 a month. They're starting to reassess their jobs. They're starting to look at how much childcare will cost. They're starting to think whether they're going to go back part-time. And this is a time where we've recognised that your clients may look at cancelling plans, and it's not the right thing for them to do. So after 4 weeks, we'll waive those premiums for up to 6 months. And also for an involuntary employment, again, after 4 weeks, we'll waive up to 6 months for your clients. So it just gives them peace of mind that we are helping clients at a time of need and they don't need to cancel their plans. So I've already mentioned that critical illness cover can be added to your adult IP policies. Now, when I was an advisor, one of the things I would always ask around my fact find was I would speak to the clients and say, you've told me how much your sick pay you get from your employer. Now, please tell me, how much sick pay does your employer pay you if your child was critically ill? Now, they'll probably say, I don't know. And the next question I throw back to them is, okay, tell me, how long would you like to be off work if your child's critically ill? If you're self-employed, I'd be asking, how long would you, or how much money would it take to be able to run your business and to you be taking income without having to worry about your business and just for you to be able to focus on your children? Now, being able to add children's kick to IP allows parents time off work. No parent wants to be thinking about their business or thinking about their work when their children is critically ill. So we allow you to choose the amount of children's critical illness between £10,000 and £100,000. Now, this makes sure that you're giving the right amount of cover for that family. We also allow you to cover from 24 weeks in the womb right up to the age of 23, regardless of education status. The other benefit of adding children's kick to IP, I really believe it opens up the market for you to speak to rental customers as well. So if you're not quite speaking to the clients who are not looking for the mortgages, it gives you an opportunity to speak to people who are renting, because they rely on an income too, and they have children. Now, if children's critical illness is on there, I believe it makes your clients' policies more sticky. They're less likely to cancel it. All parents will work through when they're poorly and sick if they need to. But what a parent doesn't want to do, as I said, is be worrying about their jobs or their business when a child's critically ill. They just want to focus on the children, and that allows this to happen. So what else is built in? So these are quite common things that most of the providers offer. So you've got your minimum cover guarantee and your cover uplift. What I would describe these are your safety nets for your clients. So there's times of earnings when earnings will drop for your client. Now, we take evidence at point of claim. So there are times where when we take that evidence, there could have been a drop in somebody's earnings. So if they're employed, it might be they've had a career change, they might have done less overtime, they might not have had as many bonuses. If they're self-employed, it might just be that they've had a downward turn in taking, something's happened. So we offer a minimum cover guarantee, which is £1,500 a month guaranteed to protect against any future earning drops. Now, when we take that financial evidence from your client, when we work out what we're allowed to give them based on the percentages that we allow, if there's only a 10% difference, a 10% shortfall from the amount we're allowed and the amount that the sum assured for, we'll also uplift it. So it does really create peace of mind. You've also got hospital cover. Now, hospital cover doesn't sound like a massive thing, and it doesn't sound like, it's something that's a real benefit to your client. But if you're in the hospital for a long term, there's costs that you don't actually think of. So it could be costs of parking. It could be costs of childcare. You're in hospital, you need to do more after school clubs or the childminder more or nursery fees more. It could be you just want your partner to bring you in more McDonald's and KFCs because hospital food is absolutely poor. So there's costs that we pay. So we pay £150 a night if your client is in hospital for more than 7 nights, and we pay up to a maximum of 90 nights. Now, the beauty of ours is it's backdated to day 1. So on day 8, your client will get £1,050 straight away. And we don't have to be paying a claim in order for the hospital cover to be paying out. We also offer an unpaid work break. So this is something that probably, doesn't sound like a massive thing. But if we think about how insurance works with age. So it increases as you get older. So if your clients decided they wanted to take some time out of work, so it could be for a variety of reasons. Could be they want a longer term maternity or paternity. They want to go studying, traveling, just taking a break out of work. Now, the easiest option is to cancel that plan and then start again when they're back in work. But if we think of how consumer duty works and looking at foreseeable harm, this is not the right thing we should be advising clients to do. We should be taking advantage of the unpaid work break, because this will stop your clients. Obviously, if they did take out a new plan, they're older, they may have had some health issues in that time, so they may get them excluded on the IP. So we allow an unpaid work break where your clients can reduce cover and reduce the premium for up to 12 months, which is the right thing for the client to do because they've still got that underwriting there, they've still got the premiums locked in at what they did before. GP anytime. This is a great opportunity to let your clients get value up front. Nobody wants to think about claiming, but at the moment, we've got a massive strain on the NHS. So it's whenever someone's poorly or they've got a child poorly, you phone the GP up and they say you've got to phone before 8 o'clock. It's like an Olympics trying to get through the doctors. So GP anytime allows your client free access to a GP 24/7. And this is 7 days a week, 365 days a year, anywhere in the world. Now, the beauty of ours is there's no limit to the calls that your client can make. Now, the peak times we found are calls between 7 o'clock and 10 p.m. at night. And these are times where, you'll find yourself having to phone 111 or be sat in emergency services, those kind of things. So we give that opportunity for your clients to use GP anytime at any time of the day that suits them. Now, if your client was to buy this from as a standalone to be able to have access to a GP, it's actually worth about £30 to £40 a month. So really getting your clients to engage with it early will get them seeing the value early in the IP and also keep your plan sticky for you. Also, if they're going through a claim, we offer a second medical opinion service as well. So this is a dedicated nurse from Red Arc who will look at everything for them and make sure they're on the right treatment path and make sure, they're not going down that Google rabbit hole, and give them advice and hold their hand through a difficult time. So now I'm going to hand it over to Eddie, who's going to go through a bit of our underwriting.
Thanks, Danny. Thanks for that. If you just want to change up to slide 18 for me, Danny, that'd be great. Thanks very much. Yeah, thank you. So I'm Eddie. I'm a senior underwriter at Guardian. I've been with the company just under 2 years now. Worked in the insurance industry for the last 20 odd years, which makes me feel even older. I don't know what I felt yesterday was my birthday. So generally, as I said, I've been with Guardian for 2 years. I find that Guardian are very inclusive and try and be fair and reasonable to everyone. Obviously, there's some instances where we can't actually offer cover, but I feel like Guardian do try and go above and beyond in certain situations to offer cover wherever possible. The example being from a non-IP point of view, I'll get into IP side of things later. For example, from a non-IP point of view, they will consider cover for smokers who've got diabetes, heart disease, cancer, that sort of thing. Other companies would usually decline for the combination of those risks there. We also seem to be good regarding BMI side of things. We would, for example, for people who are pregnant, we would look at their pre-pregnancy weight rather than their current weight. So we assess on their weight before they got pregnant and gained the weight. Also, from a BMI point of view, we'd look to round down rather than round up. So, for example, the client applied and they would say, for example, a BMI of 36.9. we would round down to a BMI 36 rather than round up to a BMI 37, which other companies may do. So that may have a cost impact on the rating or the assessment on the application. We also look from a non-IP point of view of diabetics for life cover. We could potentially offer standard rates if they're older lives, long-standing, that sort of thing. So there's just a couple of examples where we do go above and beyond in the marketplace. As for our IP philosophy, we just want to change the slide, please. Number 19, please, Danny. So yeah, we don't offer, as mentioned before, as Danny mentioned before, we've only got the one definition for IP, the own occupation, the own job definition. Other companies offer activities and own occupation definitions. This obviously can cause a lot of delay, a lot of anxiety at claim stage, because it can be a bit of a grey area whether they can claim or not. So yeah, and it can cause a lot of delay, a lot of anxiety, a lot of costs involved in assessing the claim. So obviously it's more simplified often the own job side of things, which is good. With regards to second occupations, we do consider clients who've got two occupations, which is becoming more and more frequent as people have two different part-time jobs or take another job to meet ends meet. Example being, recently I had an admin assistant who was also a gymnastics coach, a couple of hours a week. Some companies would assess on the higher risk occupation, but if the client does the second occupation for less than 16 hours a week, we would ignore it. Even if it was quite a manual or potentially declined occupation, we generally ignore the occupation, that side of things. If they did two occupations and both were over 16 hours, then obviously we'd look at the higher risk occupation and assess on that basis. So the client may be an admin assistant and also to deliver for Amazon, that sort of thing. So if that was the case, we would obviously assess on the delivery side, the delivery occupation in that instance. As well, if the second occupation also had some restrictions, i.e. they couldn't have a short defer period, or the retirement age or the cessation age was lower, we'd obviously restrict to that occupation at that time. Onto the financial evidence, Danny did mention before, we don't actually obtain any financial evidence up front, apart from if the clients are self-employed and asking for a benefit of 150,000 a year, then we'd ask for a finance questionnaire, maybe get independent evidence at that point. We generally keep our financial assessments to the claim side of things, because one, it's more relevant, because at the time of claim, it's based on the finance at that time rather than when they took the policy out 5-10 years beforehand. So it makes more sense to do it then. There are instances where we may just where the application may get sent through for manual underwriting at outset, just for a financial sense check. For example, if they've been self-employed less than 12 months, we may just check that the salary or their income is consummate to what their occupation is. But generally, they pass through with no real issues on that instance. With regards to rate classes, again, we've simplified. Again, we look to simplify under our application or our policy. We've got 4 rate classes. Strictly speaking, we've got 5 rate classes, but a class 5 is a decline. So for the acceptable occupations, they range from 1 to 4. So there's only 4 occupation classes. Some companies, like my previous company, would have subsections of that. They'd have a 1A, 1B, 1C, and so on. So they could potentially have 9, 12 different occupation classes within those 4, 1 to 4 occupation classes. That makes sense. So we've simplified that. Class 1's a class 1 regardless. A class 4 is a class 4. So the price the same. So there's no difference in the assessment and those side of things. We also have, when you're applying for an application, we have over 6,000 occupation titles to choose from. I think there may be less on the comparison site, but I'm not too sure how much by. So you should always check the closest match, and then QI or the underwriting rules engine will then do its business. And if there's any vagueness in the occupation title, for example, a civil engineer could be someone who sits in an office, does admin work all day, planning engineering works, or there could be a civil engineer who actually out on the roads, digging up the roads. So then the occupation would then be asked certain questions, the client would ask certain questions, and then it'll read out which is the high risk occupation, which is a low risk occupation, and obviously rate accordingly in that instance. We can also consider up to 3 exclusions on our IP product. Again, these depend on the exclusions involved. If there's, for example, if this client unfortunately has 3 different exclusions, all musculoskeletal, then we're probably looking at a poor risk. If they have like a neck problem, knee problem, elbow problem, that sort of thing, we look to exclude it for each one. Then we consider that being an overall risk, a poor risk, and maybe look to decline those clients. But if the 3 exclusions are unrelated, one for a pastime, one for like a neck problem, one for like an eye problem, then they're all completely unrelated. So we look to offer those exclusions in those instances. We can also consider up to 150% ratings on clients. But again, that depends upon what the actual ratings are for, whether it's a combination of things or just a single condition only. And again, our minimum rating on the flip side, our minimum rating is 25. So we can consider between 25 and 150% rating in certain instances. Nowadays, regards to medical evidence, clients have a lot more access to their medical records, medical reports. You've got the NHS app, obviously post-COVID, people still keep hold of that. If you go to see a specialist, you're generally offered the chance to be CC copied into the reports they send to your GP, so you have a physical copy at home or an email copy at home. If that's the case, and you've got a client who applies with medical conditions and you have evidence they can provide, then we're more than happy to accept that from the client rather than having to write out to the GP or specialist, take it a week, month, or whatever it takes to come back, essentially to get the same information that you provided. So we're always happy to provide that information, and if it provides the information we need to assess accurately and confidently, then we're happy to accept, and we'll look to offer cover based on that information. Obviously, as well, we can approach if the client's had a medical exam elsewhere. We're another company. We're happy to approach those companies and obtain that information from them, rather than having the client to go through a whole new medical exam, blood tests, that sort of thing. So again, we're happy to do that. On one note, one thing we couldn't get from independent or another company is copy of GP evidence. That would have to come from either the GP or the client themselves. We couldn't actually request that from another insurance company, and vice versa. We couldn't release that unless the client asks for a copy and then they send it on themselves. We couldn't actually send it direct to the insurance company in that instance. The philosophy side of things, Danny mentioned it before, we've got a both full and a 2-year payment plan, a payment period on our IP. The assessment for underwriting is exactly the same for both. If the client's rateable for one for a condition, it would be rateable the same. If it excludes on the same condition, we do the same. It'd be the same outcome regardless. If it's standard rate, it'd be the same outcome regardless for the full of the 2-year payment period. And our underwriting rules engine, if you go through the application and the client is unable to have a 4-week defer period, maybe because of the occupation restrictions, and then our rules engine would automatically say, well, we can't do a 4-week or an 8-week deferred, we can do a 13 or 26-week, and that gives you the option to discuss with your clients whether they wish to proceed on that basis, or whether it meets their needs or not. There's another few points to add about our philosophy, which are on the slide here. One thing that seems to be one of our USPs, and we don't ask about motorcycling if the client commutes or rides a bike with a road license on the road. Some companies do rate or even exclude for this even if it's just commuting or social riding only. Obviously, if they're doing like off-road and motorcycle racing, that sort of thing, we class that as motorsport and look to offer either rate or exclude for that side of things. But if it's just day-to-day riding a bike to and from work, then we wouldn't ask about it, and even if we knew about it, we wouldn't take any action on it at all. So that would be standard rate aspect. Some of our underwriting rules engine as well would offer some certain pastimes in certain instances, and also family history at ratings rather than exclusions. So that gives the client and yourself that reassurance that what they've disclosed is fully covered. There's no grey area at time of claim. There's no exclusion on there. So if they want to include that, obviously from a cost basis, they may wish to exclude, which we can discuss on an individual consideration basis. But if they wish to have full coverage and pay the extra premium for it, then the options there with the rating on those. Lifestyle promise Danny's already mentioned. With regards to smoking occupation pastimes. So obviously at the moment, our current process is to, if the client wishes to make an amendment, we'd ask for a questionnaire and full further details, and obviously assess further what changes we can make to that one. We also have what's classed as high net worth applications with IP benefit of over 70,000 a year. They'd be classed as high net worth and dealt with by our technical underwriting team, who are more experienced and have better have relationships with reinsurers, that sort of thing, and are obviously more experienced in dealing with higher net worth and higher sum assureds and higher benefits. So hopefully that'll be a more streamlined and pain-free process, because obviously at that point you would be looking at getting medical evidence as routine. So obviously that would be hopefully more quicker and an easier process for yourselves and your clients. One thing to mention as well, our other products like Crit have immediate cover and have no duty to disclose. Our IP does have a duty to disclose because there's no immediate cover. So in between the application being submitted and the policy going live, if there's any changes to the application, for example, the client suffers a knee injury or something like that playing football, then we would need to know about that. And obviously we then assess what impact, if any, that has on the application and the terms we can potentially offer on the clients. And our maximum benefits we offer currently are £2,500 a year, which is £208 a month, or up to £250,000 a year, which is £20,833 a month. And basically that's our maximum. If you select increasing cover, then it will never, at the moment, on our current parameters, the increasing cover will never go above the maximum we can offer. So once it gets that level, it will just remain level, and that won't go past that amount. And currently, regarding our SLAs, our targets, which we meet more than often 9 times out of 10, are our SLAs at 48 hours for initial refer cases and 72 hours for underwriting required. But generally we're well below those thresholds. So yeah, hopefully we are pretty slick and streamlined compared to other companies in the market. Okay, so just moving on to quickly on our pre-sales tools, and move on to the next slide, please. So we have our pre-sale tool called QI, which was launched, I think it was middle of last year, and seems to be the uptake seems to be pretty good. It's quite user-friendly, pretty straightforward, it's quite obvious how to use, and it's quite straightforward to use. At the end of the day, it saves you time, it saves you money, not having to wait around, phone people, phone around the houses, that sort of thing. If you do need to phone us, if you do decide to phone us or email us, we as underwriters, we'll use exactly the same tool and give you the same outcome as what the tool gives you there. Obviously, there's some instances where, for example, like cancer, that sort of thing, where it'll ask for a GP report, and you may want to give us a call then to speak to someone to get the final outcome. By all means, that's fine. But obviously, for the more mundane ones, such as height and weight, occupations, avocations, pastimes, that sort of thing, I'd always point you towards trying QI in the first instance and see whether you get what the outcome is on there. And if you feel you need to discuss, then obviously by all means, give us a call. Just move on to number 21, please, Danny. Sorry. And then last slide from me. Basically, yeah, on the QI tool, multiple conditions you can add on there. You can add on clients' height and weight, smoker status, alcohol status, the family history, their occupation, their medical history, their sports history, that sort of thing. At the end, it will give you exactly what the outcome will be, taking into consideration all the different combinations. If there is a combination risk factor, such as like a client with a family history of breast cancer, who also has a history of breast conditions themselves, that will obviously flag that as being a concern. That may send it through to manual underwriting. But yeah, the outcome is exactly as the application is. The basic QI is a form of the application. So, and it will give you a pre-sales. Just lost my train of thought there. Sorry. Yeah, and you can also download this if you want. As preview, you can download and give you an indication as a PDF. And you have got something there in front of you if you need to challenge it as and when the application is submitted. Okay, so that's enough. I think that's the end of me. So over to you, back to you, Danny.
Thank you. So let's talk about claims. So if you think about why you recommend a policy, it's really to give people a peace of mind and give people a financial safety net. And what we don't want is to make the claims process a difficult situation. So we try to make it easy as possible. So how we do that is, first of all, it's paperless. So we're not going to be stuck to a list of questions. We have a dedicated team Now, this team is just a telephone call, and it's a person on the other end who becomes their dedicated claim handler, and they just have a conversation with the client and they listen. Now, what they will listen to is everything the client's going through. They'll really empathise with the client and really understand what impact this is having on their lives. And if they've got a menu plan, it'll really look at all the ways we can help and support that client. Now, the other thing we offer is we can offer accept customer evidence. So what that means is at point of claim, we don't necessarily need to see a medical certificate from a GP. Now, the reason why we do that is it's quite easy for a client to get a medical certificate from the GP. They don't even really need to see a GP in person anymore. And to be honest with you, it doesn't show us very little. So we're able to gather all the information from the client and really make an informed decision on whether we pay a claim or not. And we also try and keep the client and yourselves as advisors informed throughout the whole process by making sure we're keeping in contact with them. The other part, obviously, is our Halo service. So with a claim specialist, they'll speak to the policyholder and take all the relevant information. They'll understand the client's situation and manage their expectations. And then what they'll do is they'll recommend the policyholder and identify any ways that we can support them under our Halo brand. And they'll introduce the claimant to the best partner that can offer support, and that may be support for them to be able to get back to work. And what we also make sure is the claimant also understands and understands why we're supporting them and they're happy with everything. So our Halo service is really an extraordinary claim support service that we have. So how I explain this is a bit like the AA. So if you're a member of the AA and your car breaks down and you break down at the side of the road, the AA come and they look under your bonnet and they just close the bonnet and say, yeah, you've got a problem, offer you a check and drive off. Now, that's not how you expect the AA to work, and that's not how we work as an insurance company. So yes, we want to be paying the claims and offering them financial money for the clients, but what we also want to do is make sure we're getting those clients back on the road and that they're safe and that they're happy. So we will create a support package for the clients that's tailored to them. So there's no such thing as an ordinary claim. So it really does bridge the gap to stop from the long NHS waiting list. So things that we could help with, we could help pay for a minor surgery if there's a long waiting list on the NHS. We could help support with physio. If a client's off from long-term sick because of it, maybe they need some form of counselling, and currently on the NHS waiting list is about at least 6 weeks, we might offer them counselling and give them support packages on there. Now, the aim is to get that client back to work as quickly as possible. And as I mentioned before, because we take we waive the premiums from week 4, and that encourages clients to tell us about a claim early, we can support that claim right early on in the process by offering the Halo service really early on. So it may be by the time we start paying that claim, that client's already feeling better and wanting to get back to work. So as I said, it's a really bespoke service. We help with extra costs. So things we have done in the past, when we've had clients phone us and tell us, they are a little bit stuck, things are getting on top of them. It may be that, parking's quite a lot of money every time they go to a hospital for a review. We've paid for offered money for clients for parking. We've also offered client support with bereavement or counselling. So bearing on our life products, we had a client phone and her husband had passed away. She was having quite difficulty filling out all the probate forms. So that's something that we can help with. So there's no limit to the amount of things that we can help support our clients with, and your clients supporting that extra care for them. So as I've mentioned before, our proposition is really now complete, having income protection on there. So you've got our life-only proposition, which really has a market-leading terminal illness definition. So what that means is we've got a terminal illness definition that if your clients are diagnosed with stage 4 cancer, motor neurone disease, Creutzfeldt-Jakob disease, which is your mad cow disease, or Parkinson's plus syndrome, regardless of the life expectancy that they get from a consultant, we'll pay the life protection early. You've got the standalone kick, which really has crystal clear definitions and also offers an upgrade promise. So if we change our definitions, we also change our definitions for all our clients, which really rewards loyalty. You can mix that up and do a lovely combined life and kick proposition. You've now got the IP you can add on there and the children's critical illness proposition, which you can add with any of our core products. So as I mentioned, the reasons why we would like you to recommend us and hope that you become advocates of ourselves is our crystal clear definitions. It should be really easy for you to be able to explain these to a client if they do ask questions. It's also really easy for your clients to have certainty and understand how we pay out. We've got the upgrade promise on there for our critical illness cover. We also offer dual life, which basically means that we give partners individual cover. So if one of your partners claims, it doesn't affect the other person, or if the partner's separated, it doesn't affect the other person. And this really fits in line with consumer duty, because as we've already mentioned, insurance goes up with age. It might not be a right thing for a client to do to stop and start a policy because they've had a change in circumstances. Terminal illness definition, I've already mentioned this. As I said, incurable stage 4 cancer, even if your life expectancy is more than 12 months, then it's really good to offer our life protection only product. Most a female who gets diagnosed with breast cancer, her life expectancy is usually around 3 to 5 years. It's not the right thing to for a client in order of making them wait to have a life policy payout just because the consultant's not giving them the less than 12 months to live. And the option to add our children's critical illness cover. Okay, so we'll see if we've got any questions.
Thank you so much, Danielle. If you've got a question, just type it into either the Q&A box or the chat box. I've got one, and I'm sorry if I missed this whilst you're doing your presentation, because you may have said it already. You talk about the jobs, and quite specifically that you'll pay someone very much on what they do. A lot of people over the course of their employment kind of change the job that they do, but the title's the same maybe. At what point are you saying, right, you're doing this job as opposed to the one that maybe you put on the application form before? Is that something that's built into it at all?
So we take, obviously at time of claim, the claims assessor will be asking what their day-to-day roles and duties are. So we'll be looking at that point, assessing the claim at that stage. So if there has been a change in the job, we'll be asking at the time what their day-to-day is stopping, preventing from doing their job. So we do appreciate, obviously, roles do change. You may take on more responsibility and things like that. So it will be assessed at claim stage. Fantastic, because I think that's always a concern, isn't it? Is when you write down what you do and you think, well, it kind of sort of says what I do, but if it's done at claim, that totally takes that out the equation, doesn't it? So that's really good. And often the statements that we'll be sending out to advisors and clients yearly, we'll also open that up conversation early so that the clients are aware that they've got this cover, and it will say what the job title is, and if it has changed, it will prompt the client to make sure the policy is up to date and it's the right policy for them. Brilliant, thank you. Happy birthday, Eddie.
Thank you.
It's probably not the way I would choose to spend my birthday.
No, it was yesterday actually, yeah. So I had to have a quiet one last night, let's put it that way. So yeah, so it's all for today. So yeah.
Fantastic, thank you. I've got just what I was going to say is, okay, if a self-employed person's income varies annually, how is the amount paid assessed? Is it averaged, or do you take the last financial year? And he's given an example of, say, a self-employed dentist. How would you deal with that, do you think?
Ideally, we'd have someone from claims answering this one, wouldn't we? But
so at claim stage, for self-employed, there's a variety of ways we can look at assessing a self-employed person. So we can either do an average of last 3 years' accounts, we can take the last year's account, or we can take 12-month bank statements. We'll work out whichever works out best for the client.
Fantastic. Hopefully that answers your question, Jatinda. So if anyone else has got any questions, just pop it on either the chat or the Q&A box. For those people that aren't registered with you, if you contact myself or your other regional manager, if you're in a different part of the country, we'll get you registered with Guardian. It's a fairly simple process, isn't it, from your end? Just give us your details and we'll get all that sorted for you. Is there anything when they come to doing the sourcing that would help them be more specific to get the right policy, that in your experience?
With regards to IP,
Yeah.
I think it's really, in order to get the right policy for the IP is really understanding what the job they do with the day-to-day activities. So when they source, and obviously they may see a provider is a little bit cheaper than ourselves, in order to bring why they own job definition to life to that particular client is really understanding what their day-to-day roles and responsibilities are. So if they look at the definition of own occupation, it does say that under own occupation, in order to pay a claim, they'll only pay a claim if they can't make a reasonable adjustment. So if you can be able to look at someone's role and what their day-to-day duties are and think of reasonable adjustments that actually they might be able to do in order to still work, then that's where own job fits better. So if you think, for example, my role, I'm a field-based BDM. However, we already had this conversation earlier about how Zoom and Teams allows me to work proactively on screen. But if I had an own occupation definition, say, for example, I broke my leg or I was suffering migraines and I were unable to drive, okay? Under own occupation, they would probably say, actually, Danny, you can still do your job. You just need to conduct more meetings over Zoom and Teams. But I'm a field-based and my roles and responsibilities are conducting over Teams, but actually more often than not, I'm out and about on the road presenting and doing things like that. So that's why own job would fit some people better, because the reasonable adjustment I would have had to make under own occupation is to be able to do it on Teams, whereas on own job, I can't do the job that I'm employed to do. With regards to other products, I probably would be looking at, in order to be able to source better, I think realistically it's the FIB, so family income benefit. We don't offer indexation on family income benefit. So if you're using on sourcing system and you tick index, it will automatically not show on family income benefit. So if you do want to put users for family income benefit, don't press index. Now, the reason why we do that is at time of claim, your clients have the opportunity to take the money up front, so they can have a lump sum. So that can be a benefit for the client, because rather than have it monthly, they decide to have it as a lump sum. Now, other providers do offer that, but what they do is, because it's a liability on their system, they only give them 91% of the sum assured, whereas we would give 100% of the sum assured at the time of claim. So on sourcing, you will see, if you do put index for FIB, we won't show on there. But everything else we will show. With regards to how we do show on sourcing, there'll be premiums for with and without children's kick on there. As standard, everything will show is £25,000 worth of children's kick. But if, as I mentioned before, if you want to tailor children's kick to your clients and your family, you need to go through our website to be able to do that.
Fantastic. Another question just come in. Just checking, can IP cover be combined with critical illness?
Yes, it can. Yeah.
Cool. Thank you. Brilliant. Thank you. If anyone's got any more questions in a couple of seconds we've got left, quickly type away and we'll get them answered. If you think of anything after today's session, contact myself or Danielle or your field-based BDM and ask those questions. If you want any more information, just let us know. I'd just like to say thank you so much to you both for presenting. It's been a really interesting, and I think income protection is one of those things, it's so easy just to do kind of like the life and then maybe get a little bit of kick, and income protection is so important, and I think it's arguably it's the policy that most people should have first, not last. That's just a personal opinion, but I guess budgets will always determine where we go on that. So thank you very much. For those of you that attended today, thank you for turning up. Let's say you get your CPD certificates in due course. If you haven't by say Friday, let me know. Good. Anything else you wanted to add, Ed? Wanted to add, Eddie or Danielle?
No, thank you. No.
Oh, thank you, Sam. Thank you.
Brilliant.
Yeah.
Thank you all. Have a good day.
Thanks for your time. Thank you.